Good evening, sir. Nice to have
Good
you.
evening, good evening.
Nice to have you today with us to discuss about the all-important topic about risks
Yeah,
associated with projects, risks associated with the financial closure, what are risks, and how they contribute towards infrastructure development. Okay, this is a very, very important point. Let's start straight away.
mm.
Let me ask you first. Uh, what constitute risk and what is the important role it plays in infrastructure development, financial closure, implementation, and things like that?
In simple term, in word, one sentence, risk is an uncertainty that matters to me towards my objective. So this is what whole crux goes there. Risk is an uncertainty. I'm not sure whether it is going to happen or it is happening or it will happen. So it is an uncertainty, but that uncertainties, we cannot live with that. We have to have some mitigation plan put in place. Coming to your point on this, uh, uh, you have given some points to me, and you asked this question: what we look at. I'll just brief about what IFCL and how IFCL risk management is evolving. When proposal comes, it goes to the business unit, and business unit they do some assessment, appraisal, financial modeling, and they do some kind of due diligence. When proposal comes to me, I get into each aspect of risk. Each aspect of risk, I have identified around more than 100 parameters, and each I would say not 100, but 56 parameters, and each those parameters have been categorized under four parameters. So one, two, three, four kind of thing, and that defines my entire rating. So once financial model is there, I do see whether financial model is in line with my business requirement, in line with DSRA or DSCR or debt equity or IIR parameters we look into, and there are some calculations goes into that, and I get some kind of risk. Then I do due diligence of the documents, PR or reports, lender report or any other reports, and I get into goes through those reports and mark that thing where what are the risk perceived risks are there. So primarily when we get into risk rating, so we key risk what we see is infrastructure is capital intensity, that is long term. Uh, Life cycle of the project. What is life cycle? Usually, particularly concession period is for 15 to 20 years. So my lending would be around 85% of that period. But nowadays, lending is happening for 5 years, 7 years, 8 years, 10 years, and refinancing is a now new business model for the
Right.
institution. Then public interest in that project. There may be some kind of requirement. Stakeholders may be there or agitation. Those type of requirement I have to see. Then all infrastructure projects are non-recourse based. So I'll have to see that whether this aspect are duly covered or duly captured and how to mitigate those risks. So there may be some additional covenants for it as well. We put in place. We put in our sanction letter. We put through our documentation. So these are the requirements we do see from typical red flag point of view. And red flag, what I see is land acquisition. So land acquisition. So what our policy defines, 85% land has to be there. So otherwise we don't lend. So these are the restricting parameters. Regulatory and political risk. There are certain events, because I am coming from the regulatory background from National Housing Bank. I have seen many of such cases. Political announcement happen, project gets failed. I have seen in particularly in the state, southern states, nonsense announcements were happening, and ultimately bank has to fund that thing, and there was no recovery for that. And technical and execution capability of the developer. So Technical technologies every day keep on changing, particularly in power sector and renewable energy sector. But execution risk, whether that the EPC contractor has that capability, whether it has that EPC contractor has good reputation. So this type of requirement we do see and mark in case it is lower rated, rating will go to 4, 3, 2, 1 this way. And if it is reputed, particularly some of the power project, renewable energy projects where Adani is there. Adani Kaida or Tata Power or similar agencies. So I have tested, they have got 20, 30 projects and it is tested one. So then the rating, highest rating we award. Coming to ironing out hurdles before lender proposal, lender approval. So front-loaded due diligence, of course, I have discussed. We do diligence, secure critical approval first. In case some pending approvals are there, so we put in place, put through our sanction note and sanction letter as well. Unless those conditions are met, we don't get into any sanctioning process further. Stricter, robust, and bankable contract. I need to see whether contract is bankable, particularly PPA contracts, whether which is the agency where offtaker, who is offtaker. So there are state level, there are, I think earlier it was more than 180 days overdue. Now it has gone down to 90 days overdue, and some of these cases 45. So I need to see which state, which is the offtaker agency, offtaking agency. So these are the parameters. EPC contract I have already discussed. Offtake agreement and operational and management agreement, and a fixed term contract. Whether in case any delay beyond 6 months or 1 year, that is add on to the cost, particularly on account of interest rate as well as inflation as well. So even 1 year delay, it is costing around 15% to the project. So that we do take care. Then equity demonstration by the promoter. In case, usually small formula, I would say 1:4. But 1:4 is border case. We just insist for 30% equity. 30% equity, so that it comes to rating, and if it comes to rating, so that benefits for the interest rate as well. That benefit goes because higher rating, lower the interest rate. And DESRA, usually some of the cases, good promoter is there. So 3 months DESRA, otherwise 6 months DESRA we are insisting. So 6 month repayment they have to maintain liquidity in the bank. And in case some credit enhancement happens, so credit enhancement we are looking at. So these are the parameters, but the extent of risk influence on lending term, so particularly interest rate, even 10 basis point or 20 basis point, that has major impact on the project. 20 basis point of 8%, so 25 basis point, something around 2.5%. So these are the, another thing is tenure and amortization. Nowadays, what is happening, funding is not available for 15, 20, 30 years, like Bangalore airport. 30 years funds not available. So what happens? Then they go into 10 years paper, 15 years paper, 5 years paper, and refinancing risk is always there. In case the interest rate goes up, what is going to happen? It will have a direct impact on the project. So these are some of the major things what we are looking at. Debt equity ratio, I have already talked about 30:70 kind of thing. Guarantee, in case promoter guarantee, we insist sometimes in case of big project, we insist on promoter guarantee or promoter company guarantee for that. Completion guarantee in completion guarantee, otherwise completion guarantee, nobody gives that. DESRA tailor-made covenants, we usually prefer that in our sanction letter, that you comply with this requirement, and we are okay with that. And credit enhancement, sometimes we insist for collateral as well, in addition to the project asset, because project assets we are financing cash flows, not the asset. So we don't have any charge or we don't have any security. So insist for any other securities or personal guarantee or corporate guarantee or promoter's guarantee kind of thing. So these are the small key parameters what we look from the point of view of the risk management. But nowadays, what is happening? There is talk is every day or alternatives we have been discussing. Major focus is on climate related aspects. We have not covered in our any of the appraisal, and yesterday I had meeting with CDRI. So we are working on some resilience infrastructure parameters, and we'll be coming out with some kind of, but there is no mandate by the government. So I was forcing them, I was insisting on whether this type of requirement can be inbuilt in the inception stage, DPR stage, so that that cost also comes in and we'll finance that and resilient infrastructure will happen.
So what kind of things will come into that climate thing, sustainable thing? What kind of elements? What kind of incidents?
Sir, there are, if I talk about physical risk, of course, we are looking at transition risk as well, but let us talk about physical risk. Usually we see climate risk as a physical risk. So riverine flood, heat waves, heavy rain, or precipitation. So there are these we have categorized into two parameters, acute risk and chronic risk. And particularly in IFCL, we have developed a model with the help of one of the rating agency, and we have captured 783 districts, and every district has got different kind of parameter and different kind of rating, and all entire portfolio is rated from the point of view climate risk assessment point of view. So that's what we are looking at, and this is going to be one of the biggest risks because you cannot see past record, but you have to see future as well. Because futuristic, just I'll give one example. Recently, 2 years back, what has happened? One project came to me for rating. So one of my officers said, "Sir, इसमें riverine flood है." तो मैंने कहा क्या हो सकता है? Sir, disaster हो सकता है. That proposal gone to the management. Management was not happy. Why you have mentioned? You earlier didn't mention. But I said, sir, I have started working on climate risk. Now I do see this risk. Of course, we have not put in place some mechanism here. So management was not okay with that. No. You just go back and come out with new solution. Next day, management called me, sir, I would like to go with my officer and I'm okay with this. No talk further. And that proposal has happened and approved by the board. And what has happened? You won't believe. Within 16 days, that disaster has happened. And what is that project? Tista River पे जो हुआ था, and exposure was 3,000 crore. Just imagine my 2 years profit would have wiped up. And government came out with the letter that any exposure if we have, just write it. So we have to see the risk department has got a lot many to say. Of course, we cannot keep everybody happy, but we have to do justice to the proposal as well as, or in case we plan to go with the risk, then we have to put some kind of mechanism, mitigation mechanism, additional covenant, equity, additional equity. So these are the.
So this will be for all infrastructure projects, or it will be general?
It will be for all infrastructure projects. So when I talk about climate risk, let me brief something about this. Physical risk as well as transition risk. Transition risk where it is going to happen, particularly coal-based power plant.
Right.
So that is transition risk is highest, 5, level 5. 1 to 5 we have got scale.
Transition means transition to an greener fuel or something?
Yes,
like
greener fuel, greener.
Okay.
So that is going to happen. Government has also come out with, for coal-based power plant, they have come out with a new ICT technology, some technology they have come out. And in case if they implement, we have upgraded those projects to get the benefit of interest rate. We are promoting those things.
Okay. So midway through the project cycle, they can do that transition from
between the project cycle they can. And even for existing project, resilience is not happening in world over. World over ratio is 7% for 7% for adaptation or resilience, 93% for mitigation. Just green project lagao, renewable energy karo, that's it. But Indian context, it is 20% adaptation, and government is quite serious on this. Let us get into adaptation or resilience. Only thing is government has to balance, or government agencies have to balance कि हम लोग अगर कर देंगे तो project will not come up. So we have to balance that thing, and slowly, but going forward, I'm hopeful of within a period of 3 to 4 years, we'll come out with some kind of through government policy that will be incorporated in, at the time of inception or DPR stage.
So, I mean, I understood. I mean, all these risks are there and all that, but there are also different kind of risks where, you start the project and then, because of government policies and, things like that, suddenly you find yourself because of a government policy. For instance, suppose there is a port project or a cargo terminal which was set up for importing coal, and suddenly you find that government is saying, oh, no coal imports. And then the project goes into stress because that was the basis on which the project was designed. So in such cases, what will you do?
This what it happens, and there is political risk. We call it as legal or political risk for that. So political risk we do cover, but we find some kind of mitigation there, either by way of again corporate guarantee, personal guarantee, or credit enhancement kind of thing. But at the level of government, particularly Andhra government, and now I think 8 states has taken that step forward, particularly on power purchase agreement. Earlier, power purchase agreement used to happen 15, 16 rupees. Their cost was 11 rupees production cost. And now what is the production cost? It is 3 rupees. So why government should go ahead with 11, 12 rupees or 16 rupees? So they are bargaining now. Now you bring down to 5 rupees or 4 rupees. But what will happen to that project? That is another risk, a systemic risk. We are not considering that as well today. But it is going to happen. And when we are fully achieve this 500 gigawatt or something, so relevance of this whole base project or older power purchase agreement will be difficult to manage. Particularly, Andhra government has defaulted, and few government are on the verge of negotiating and default. We will not say default, but they are trying not to pay.
So default means, I mean, default to whom? To whom are they defaulting?
Default to a project company, because government has power purchase funds. So government has to, government agencies, DISCOM, they will have to pay with the agreed rate. That, of course, PPA has happened for 30 years or 25 years. That will continue. It will not change. But now power generation is costing me 2.65 rupees or 3 rupees, within 3 rupees. So paying 15 rupees, and that burden, who is burdening? End customer. So there are challenges, and we have to live with those challenges, and project by project we have to assess the risk.
Do you think in such a situation there has to be a reset mechanism whereby, because these are long gestation PPP and all that, like power projects, 30 years, even in ports and roads and all that, these are long horizon projects where you never know what's going to happen. I mean, forget about long. I mean, 2 years down the line, you don't know what's going to happen, right? So is there a reset mechanism that you think is necessary so that, you can avoid, stress in the banking sector?
There is no such mechanism, and once we get into arbitration, what is the recovery rate? IBC, not even 30%.
Right.
So lenders have, but government view is that अगर सब कुछ ही mitigated है without any risk, so I don't need financial institution.
Correct. You're right. That's also a point.
Financial institution has to live with that, and that is what NPA happens. But it is not intentional sometimes. A project go bad sometimes. But today I joined in 21 year September 21, and we have taken some call. That time my NPA level was 9%, 9.22%, and before that
Mm.
19%. We have taken rehauling entire rewriting rewriting of risk management policies, and we came out with risk-based pricing policy, and that has worked well for last 4 years. And
Yeah.
without having any new NPA coming in, only one NPA has happened in 4 years. But I don't want to take that credit, because market is also doing, sector is also doing well. So
Yeah.
that goes, but that cycle may not be continuing for 30 years. So
Yeah.
we have to live with that. But provisioning, and that is the reason what happens nowadays. Refinancing is happening very frequently. Why refinance is happening? Refinance is 5 years. They borrow for 5 years. Major risk, again another risk is interest rate risk. Nobody talk
Yeah.
about that.
Right.
Floating rate, okay, they have benefited and projects are doing well. Even in case if interest rate goes up by 1%, because RBI brought down by around 1.25% or 1.5% for 1.5 years. If it goes 1.5%, what is going to happen? What is the percentage? Their cost will go up by 20-25%. So lot many such kind of instances are there, but yes, risk management has to be evolving, and particularly proactive risk management is very necessary for infra sector. It is not
Yeah.
retail lending. एक लोन खराब हो गया कुछ फर्क नहीं पड़ता है.
Right.
Here one loan means entire your net own fund has
Yeah. The project
profit
size is correct.
gone up,
Projects.
gone out.
Yeah. So,
Particularly
so
Bangalore, yeah.
also, this is a fact. I mean, in the initial stages of India's privatization journey, when, there was a certain set of conditions, right? I mean, on the basis of which you appraised a project. But then as you go along, there are changes that are coming in based on the learnings that we get, and you refine those, problems. And so it is all prospective. It is not retrospective all the time. In government, everything happens prospectively, right? So that's the problem. So the earlier projects get stuck in the
Yes,
same thing,
yeah.
where there is no scope for them to move to the new regime. So that's the problem. So
It is just impossible again, because those legal contracts or those requirements or PPAs, those were governed by the existing regulation that time.
right,
But particularly road sector, if you see road sector in 2016, IFCL took a lead, and they have discussed with government, and government came out with a hybrid annuity model
correct,
in road sector, and
correct.
that is going well. I have not
Yeah.
seen any project is being failed or something. There may be reason for that, but NHAI is being an agency, and I think I don't see any major risk there, because government is funding 40% upfront, and then 60% in installments with bank interest rate. So and it is going well. But
No,
now I
no.
think month high.
Now the thing
Yes,
is
sir.
that that ham was introduced to clean up the mess that was prevailing at that point of time, because there was huge stress in the road sector and people were
Yes.
not coming forward, and then somehow government had to I mean, infuse confidence back into the investors to invest in the road sector, right? So that was the thing that ham created a lot of comfort in the investors, and it is going well. Now I think they are trying again. Now that having reached a certain comfort stage, they want to go back to the BOT tolling, and people are still not coming. They're still, see, that is the issue.
See, revenue uncertainty is one of the key challenge there, because I'm not sure whether what is happening nowadays. Even national highways साथ में चल रहे हैं, state highways भी parallel.
Yes,
So
competing
then
facilities.
competing facilities, and so they are worried about this, and ham model is working. We have not heard about anything government may, because the frequent meeting happens. Government is more interested in getting into insurance for the project. So in Indian context, what is the insurance? Only physical assets. I don't have physical assets. I have charge over cash flow. But we are working with other agencies, international, and looking for political risk or parametric risk, insurance kind of thing. So that in case of any disaster, immediate payment should happen there.
So insurance means I didn't get that. Can you please elaborate it?
For every risk, there is insurance globally, not in Indian context. India may save only physical risk, physical asset covers, nothing else. Even termination of concession, no, you don't have any support or any insurance, or any failure of project, you don't have any support. So government is, of course, in this budget, they have announced some kind of guarantee mechanism, and that was going on for last 6 months. We have been discussing, and insurance agency, insurance companies were also invited, and what infrastructure finances require. So they have worked on that, because domestic insurance company, they don't have appetite to.
So you will have to look at overseas reinsurers or something like that, is it?
Yes, reinsurance. But their point is, insurance companies' point is, what they say, reinsurance is not happening because they don't want to take that much load, and we are unable to reload on other insurance company. So there are challenges, because bigger project, but at least some kind of comfort. It is not disaster, means it is not 100% disaster. Your asset may get destroyed by 10%, 15%, 12%, and revenue impact may be 10-5%. So that, if that is covered, that will also give quite a big comfort to the lender. And what happens in case such covenants are there or such comforts are there, your interest rate goes down and interest rating goes up. So give and take is there.
So how will this risk guarantee fund proposed in the budget going to work out? Any idea how it is going to
Sir, I am not clear about this, but during discussion it was mentioned that whoever requires guarantee, they will have to forward the proposal to the government, and government will administer. We wanted IFCL to be given that responsibility, but the government is of the view that will create a trust, and within ministry will manage. It is possible to be given to some other agencies, because why I was insisting when I was working with National Housing Bank, there was low cost guarantee fund, low cost housing guarantee fund. So it was given to NHB, and NHB is doing administering that. So I thought a similar way it will happen, but there was a discussion, and they said no, it will be remain with the government, similar to PMAY subsidiary approval and kind of.
So it will be administered by the finance ministry, basically.
Finance minister, yeah, DFS. They use word DFS.
Okay. So, sir, so when it comes to India Infrastructure Finance Company Limited, the requirements for infrastructure funding is so huge. We not only have IIFCL, we now have a National Bank for Financing Infrastructure and Development. We have NIIF, multiple agencies. In fact, you won't believe that NBFCs like IRFC, PFC, REC, all kind of people are now so much interested in financing infrastructure. So where do these entities stand in terms of lending money? I mean, there is always this view that funds are not available. People say we are not getting funds at the right price, at the right time and all that. So how do you look at it?
So pricing may be one of the issue, but we don't have that much projects. Every lender is ready to lend. Coming to your point, IRFC or IREDA or RECPFC, they are specialized institution for power sector. IRFC, that is lending for rail.
But they are now looking at outside the sector, their own.
Yes, outside the sector, because now even RECPFC also looking for, but they don't have that much expertise. They will have to develop that expertise. It will not come overnight. So they will have to align with the institution. NAPFID is also doing well, but their major focus is on refinancing, it seems. Refinancing of existing.
And also
projects.
in the shipping sector, government has now come up with an NBFC called Sagarmala Finance Corporation
Yes,
Limited. They
we
want
have
it
got
only for the maritime
we have
sector.
got UI with them, MOU with them, and
Uh,
we'll be partnering with them on this project. In fact, we
uh,
are looking for data center,
uh,
hydrogen, uh, hydrogen, and a few more new sectors. But
mhm.
see, to the best of my knowledge, there is no funding constant as such. But
Right.
if you ask me, I'll take you differently. All those financing institutions, which are those NBFCs? Only 7 or 8 NBFCs which are into infra lending. And ratio bank versus IFCs, infrastructure finance companies, 44-56 today. So banks 44 contributes 44%, and infrastructure finance companies they contribute 56%. Now coming to main point, national infrastructure pipeline. What is the fund requirement there?
Running into
Around
lakh,
2 lakh crore, 2 billion
crores.
trillion dollar, more than 2
Correct.
trillion.
Right.
Okay.
Right.
Initially it was 111 lakh crore, but now cost has gone up and it is around 2 lakh crore. 2 lakh crore balance sheet and all infra and bank, infrastructure finance company and bank. What is the exposure? They are 33,000 crore, 32,000 crore. Just see, you are to increase your balance sheet by 6 times. Even if you get repayments 4 times, not less than 4 times, because repayment
Right.
will happen. 4 times, do your capital, does your capital provides for that exposure taking capacity? Today, as an average, 23-24% CRR. Mandatory CRR is 15%. So I can, particularly from the point of view IFCs, I can increase my exposure to 10-15 lakh crore maximum with current
Yeah.
capital.
Right. Correct.
So these are the challenges. Banks they are lending for infra. What is the lending ratio? They have got below 5% of their balance sheet size. Below 5%. So they don't have concern. I mean, they are interested in, but they have got lot many things to do other things.
Correct.
MSME financing,
Yes.
retail, and lot many things. So they don't have this is core lending opportunities for them, but they are partnering in there. That 45% earlier their ratio was 55%, now came down to 55, 44%. But again, REC, PFC, they are lending to discom companies. IRFC, that is also lending to the government. But these are the project NIP, National Infrastructure Pipeline, who is going to lend then.
Correct.
So
Right.
I don't want to open up further. So these are
Yeah.
the
No, no,
lot
no,
of
you're right.
challenges
Yeah,
are there.
the requirements are so huge, because as people keep saying, India is the biggest infrastructure market in the world. And, that's going to stay for another 10, 15, 20 years, or if not
Yes.
more.
And this is
Yeah.
2 lakh crore around. It is up to 2030. 5 years we have
Mm.
got.
Yeah,
So
correct.
5 years, within 5 years, we have to get into this. But infrastructure, it says 1% comes out with 7 to 12 rupees benefit.
Mhm. Mhm.
So employment and regeneration of income and all. So
Mhm.
I we have to again push towards infrastructure, airport or port, particularly port. I would be very interested in port sector because port requirement is there. Airport, yes, of course, smaller airport after Bangalore and Jewar Airport or Mumbai Airport. These are the major airports. I don't see this capacity requirement is there in other places. So other opportunity is road project. That is one of the opportunity, bigger opportunity. But now we have to think about climate risk, climate aspect, and we have to initially, since beginning, we have to inbuilt those aspects. And even if it is cost goes up, it is managed through financing. And again, developer will have to bring equal capital for
So, sir, when you look at it now, where we stand today, What do you think is the biggest challenge that is facing? I mean, you talked about climate, but apart from that, is there any other challenge that you think the government should address on a priority basis to increase, project uptake and, smooth implementation of projects, financial closure and all that?
See, for me, is there is not clear regulatory mandate. I mean, through when we talk about, I'm again coming back to climate. Climatic aspect, world over, it has already, there are frameworks, but in our country, we are still struggling with that. Even Indonesia, when I was in Georgia, and during the panel discussion, they did mention we have already put in place climate related aspect. Problem here is international funding, they look at what is your taxonomy. We don't have taxonomy. I have put in place some kind of a ESG and sustainable financing framework, copying ICMA framework or global framework. They say, but tomorrow government comes out with different kind of framework.
Right.
That doesn't suit me. ADB is happy with that, ठीक है हमको चलेगा. But point here is कि we have to have, it is through policy driven. So policy weakness I do see. Policy के through इसको करना जरूरी होगा. Other challenges will be there. Infra में जो challenges है रहेगा. And NIP जो National Infrastructure Pipeline, we have disclosed something about 14,000 project and 2 lakh crore requirement and all. But उनको भी materialize करना पड़ेगा. Let us call all the lender who is funding this and who is funding not. So आप लोग वही बैठ करके you will have to decide on this and get into that. And bidding will happen. थोड़ा सा रिवर्स चेंज करना पड़ेगा, रिवर्स गियर में लेना पड़ेगा. Until bidding के पहले आप फाइनेंसर्स को भी ऑन बोर्ड कर दीजिए. Yes, we are okay with this. We have given this kind of proposal and in case if a centralized appraisal system is there, so that will also be quite helpful. That ये appraisal कर दिया है, some agency दे national level एक agency बना दे and appraisal करके वहाँ से project ready funding है आप कर लीजिए. So I think a policy driven and regulatory अगर again we are missing regulatory. अभी तक that climate related direction draft direction came in 2023, 2024. अभी तक भी final नहीं हुआ है. See, disclosure is something different, but within the organization, what I need to do, what I need to look at, ये भी aspect बहुत जरूरी है.
So which ministry would be involved in that? The Ministry of Environment, Forest and Climate Change will have to
Yes.
be co-opted into this. Okay.
Yes, in Ministry of Climate Change and other aspect, different ministries are there. But I'll give you a good example of this. When I was posted in Bombay from National Housing Bank, I was associated with Maharashtra government and MP government, Chhattisgarh government, even Gujarat government, because I was leading 5 states there. महाराष्ट्र गवर्नमेंट के साथ बहुत कोऑर्डिनेशन में काम कर रहा था. आई वाज पार्ट ऑफ देयर सैंक्शनिंग एंड मॉनिटरिंग कमेटी. तो जो अफोर्डेबल प्रोजेक्ट आते थे, एवरी सेक्रेटरी 5-6 सेक्रेटरीज जिसकी अप्रूवल रिक्वायरमेंट है, चीफ सेक्रेटरी इज टू हेड. हमारी थोड़ा सा हेल्प होती थी, रेगुलेटरी क्या रिक्वायरमेंट हो सकती है, बट देन एंड देयर अप्रूवल इज टू बी गिवन. तो हैव यू सीन कोई अफोर्डेबल हाउसिंग का प्रोजेक्ट फेल, ऐसे कोई टैग लगा हो और PMAY में कोई फ्रॉड हुआ हो? So government has developed such a good mechanism and state government approves, that goes to the central government. Central government has got similar committee, they review and provide approval instantly.
Correct.
तो ऐसा mechanism infra में भी लाना पड़ेगा.
Right.
तो
Because
बहुत लंबा काम है.
invariably in some of, many of these projects are in the states, right? I mean, even if it is under the center, these projects are in some state or the other. So you have to have the support of the state governments in several matters.
Yes, of course. Yes, of course. Without state government, it cannot happen.
Mm,
And government is for infra project. Government is quite cooperative, and state government also cooperative. But in case of delay, like land acquisition, it
mm,
takes years, 2 years, 3 years. So project get delay, and that add to the cost. So
right.
land acquisition, unless land acquisition happens, आप उसको bidding मत करिए ना. बिडिंग करके
Ah,
फिर
correct.
लैंड आप देते हैं, तो जस्ट
Correct.
एट लीस्ट सम पुट सम पैरामीटर 80%, 85%. चलो भाई काम शुरू करो, 15% हम ऑन द वे हो जाएगा विद इन ईयर. नाउ यू राइटली सेड प्रपोजल लेकर के डेवलपर घूम रहे होते हैं, बिकॉज दे डोंट हैव कंप्लीट what is approval or like kind of requirement. So वो तो घूमते रहेंगे, एंड फॉर लेंडर कोई भी गलती, लेंडर का गला पकड़ेंगे, डेवलपर का गला नहीं पकड़ा जाएगा.
I know.
तो इस
But
वजह से
sir, how that brings me to the point, there is this mechanism that was set up to reduce exactly this kind of things like the PM Gati Shakti National Master Plan, that where there are several ministries involved to iron out these things. Has it really helped? Have you
difficult to
really?
answer.
No, no. Are you
Difficult to
taking
answer because
are you taking advantage of that mechanism, whether that has helped
we
you
are
in any
taking
way?
advantage, but what happens? Financial closures it takes almost 6 months, almost six
Correct.
months.
Yes.
So and even for sometimes 12 months period, 9 month, 12 months period. And during that period, what happens? Borrower, developer, he is very smart nowadays. He is not kind of earlier developer. मैंने loan ले लिया चल गया. Now they are availing different kind of facilities, and it goes to 10 financing institutions or banks. वो rate इतना दे रहा है, आप कितना दे रहे हैं. So bargaining is happening, and they are okay with that floating rate scenarios, or sometimes project become operational. Nowadays, one new business mechanism is going on is issuance of bonds. Bond लेकर के आ रहे हैं.
Insurance surety bond.
Not insurance surety. New bond to prepay the loan.
Oh, okay. Okay.
So
Okay.
last year I have got, this year I have got 11,000 crore prepayment. It is 12, 13% of my book. If I project growth of 15%, what is going to happen? I am not growing in that case. So
But
this is
in
what
in such situations when they prepay, do you impose a prepayment penalty on them just like the
that
retail
depends.
loans?
Depends when we lend into consortium, we have to have common terms and conditions. And
Correct.
lead lender, if he says no prepayment penalty, so I have to comply with that. But sometimes
Comply
yes,
with
we
it.
are taking prepayment,
Right.
so that goes along.
Yeah. So, but it is a loss for you. Somebody prepays because you are anticipating that he will run the course, for whatever duration he has taken the loan, and you have factored in all that.
So that is has impact, that is impacting my ROA, ROE immediately, because
Mhm.
see, they are replacing those loans which I lend at 9.5%. Today they are replacing at 8%, below 8%. So they are benefiting 1.5%, more than 1.5%. See, everybody is after that either refinancing or issuance of bond. And once project becomes operational, their rating from triple B, it is usually upgraded to double A minus or double A.
Mm.
So they benefit out of rating as well, and they benefit out of going to the market. So both the
Mhm.
benefits, and that is the reason lower interest rate scenarios benefiting developers. But I'm worried about after 2 years or 3 years, if interest rate goes up, so what is going to happen? Because they will have to again replace. It is not the
Mhm.
entire life cycle of the project. It is maybe 5 years remaining or 7 years remaining.
Yeah.
So that's what is happened. And a new mechanism came in InvITs. So we have comfort with that, and we are also be lending to InvITs. And NHI InvIT is doing well. There are many more InvITs. So government has planned to have more InvITs now.
Interesting conversation. I mean, it was very enlightening to hear you spell out a lot of things about this very, technical details about, financing risk and all that. We have had a long conversation. What we do is we'll wrap this up now, and we can continue this when we meet during the infrastructure summit, so that we can have
Okay,
more detailed conversations about this. We'll keep some
sure.